Question 1. The monitoring system demonstrates that a Singaporean real estate salesperson has been actively promoting a new condominium development. The salesperson has a pre-existing, undisclosed personal relationship with the developer of this condominium, which could result in a significant personal commission bonus if the development sells out quickly. The client, a first-time homebuyer, is expressing strong interest in purchasing a unit in this development. What is the most professional course of action for the salesperson? Option A. Subtly steer the client towards the developer's project by highlighting its advantages over other properties, while avoiding any direct mention of the personal relationship or the potential for a bonus commission. Option B. Advise the client to make a decision quickly on the purchase to secure the unit without mentioning the personal relationship or bonus commission to ensure the sale happens promptly. Option C. Immediately disclose the personal relationship with the developer and the potential for a bonus commission to the client, and obtain their informed consent before proceeding with any further advice or transactions related to this development. Option D. Continue to promote the condominium development enthusiastically, focusing on its benefits to the client, and hope the client does not inquire about any personal affiliations the salesperson might have. Correct answer is C. Immediately disclose the personal relationship with the developer and the potential for a bonus commission to the client, and obtain their informed consent before proceeding with any further advice or transactions related to this development. Explanation. This scenario presents a professional challenge due to the inherent conflict between a salesperson's duty to their client and the potential for personal gain, which could compromise their fiduciary obligations. The salesperson must navigate this situation with utmost integrity, ensuring that the client's best interests remain paramount, as mandated by the Council for Estate Agencies. C. Code of Ethics and Professional Conduct in Singapore. The best approach involves transparently disclosing the potential conflict of interest to the client and seeking their informed consent before proceeding. This upholds the principle of acting in the client's best interest by prioritizing their autonomy and right to make decisions based on full information. By disclosing the relationship with the developer and the potential for commission, the salesperson demonstrates honesty and maintains trust, which are cornerstones of professional conduct in Singapore's real estate industry. This aligns with the CEA's emphasis on integrity and avoiding misrepresentation, an approach that involves withholding information about the relationship with the developer and the potential for personal gain is professionally unacceptable. This constitutes a failure to disclose a material fact that could influence the client's decision-making, thereby breaching the duty of utmost good faith and honesty. Such an action could be construed as misrepresentation or misleading conduct, violating the CEA's guidelines on professional conduct. Another unacceptable approach would be to pressure the client into making a decision quickly, without allowing them sufficient time to consider the implications of the salesperson's personal interest. This demonstrates a lack of respect for the client's autonomy and prioritizes the salesperson's immediate gain over the client's long-term well-being, which is contrary to the fiduciary duty owed to the client. Finally, an approach that involves subtly steering the client towards the developer's project without explicit disclosure, hoping they will not inquire about the salesperson's affiliation, is also professionally unsound. This is a form of indirect deception and undermines the transparency required in client relationships. It fails to meet the standard of acting with integrity and could lead to a breach of trust and potential disciplinary action by the CEA. Professionals should employ a decision-making framework that begins with identifying potential conflicts of interest. This should be followed by a thorough assessment of how these conflicts might impact the client's interests. The next step is to consult relevant ethical guidelines and regulations, such as the CEA's Code of Ethics. The paramount principle should always be to act in the client's best interest, which often necessitates full disclosure and obtaining informed consent. If a conflict cannot be resolved ethically, the professional should consider withdrawing from the transaction to avoid compromising their integrity and their client's trust. Question 2. The assessment process reveals a real estate developer in Singapore is planning a new residential project adjacent to a sensitive mangrove ecosystem. The developer is eager to commence construction quickly and has indicated that minor landscaping adjustments will address any environmental concerns. As a real estate salesperson representing the developer, what is the most prudent and ethically sound approach to navigate the potential environmental regulations and impact on this project? Option A. Proceed with the development based on the developer's assurance that minor landscaping changes will suffice, focusing on marketing and sales efforts. Option B. Advise the developer that environmental regulations are unlikely to pose significant obstacles for residential projects of this nature, and focus on the project's financial projections. Option C. Proactively consult with the National Environment Agency (NE) and Urban Redevelopment Authority (URA) to ascertain the specific environmental impact assessment (IA) requirements and potential mitigation measures for developments near mangrove areas, and advise the developer accordingly. Option D. Rely on the developer's internal environmental consultant's preliminary assessment without seeking independent verification or direct engagement with regulatory bodies. The correct answer is C. Proactively consult with the National Environment Agency (NE) and Urban Redevelopment Authority (URA) to ascertain the specific environmental impact assessment (IA) requirements and potential mitigation measures for developments near mangrove areas, and advise the developer accordingly. Explanation: the assessment process reveals a scenario that is professionally challenging due to the inherent conflict between a developer's desire to proceed with a project and the need to comply with Singapore's environmental regulations, specifically concerning potential impact on a nearby mangrove ecosystem. Real estate professionals in Singapore are bound by the Environmental Protection and Management Act (EPMA) and its subsidiary regulations, as well as the Code of Conduct and Ethics for Salespersons. Navigating these requirements demands a thorough understanding of environmental impact assessment processes and ethical obligations to clients and the public. The best professional approach involves proactively engaging with the relevant authorities, such as the National Environment Agency (NE) and the Urban Redevelopment Authority (URA), to understand the specific environmental impact assessment (IA) requirements for the proposed development. This includes seeking guidance on necessary studies, potential mitigation measures, and any restrictions or conditions that might apply due to the proximity of the mangrove. This approach is correct because it prioritizes regulatory compliance and responsible development, aligning with Singapore's commitment to environmental sustainability as enshrined in legislation like the EPMA. It demonstrates due diligence and a commitment to ethical practice by ensuring that potential environmental risks are identified and addressed before significant investment is made, thereby protecting the developer, future buyers, and the environment. An incorrect approach would be to proceed with the development based on a cursory understanding of environmental laws, assuming that minor landscaping changes would suffice. This is professionally unacceptable because it disregards the rigorous EIA process mandated by Singaporean law for developments with potential environmental impact. It risks significant delays, fines, and reputational damage if noncompliance is discovered. Another incorrect approach would be to downplay or omit any mention of the potential environmental impact to the developer, focusing solely on the project's commercial viability. This is ethically flawed and a breach of professional duty. Salespersons have a responsibility to provide accurate and complete information to their clients, including potential regulatory hurdles and environmental considerations that could affect the project's success or value. Failure to do so is a violation of the Code of Conduct and Ethics. A further incorrect approach would be to rely solely on the developer's assurances that they have internal environmental consultants who have deemed the project acceptable, without independently verifying the scope and findings of those assessments against official regulatory requirements. While client information is important, a professional salesperson must ensure that such assurances are substantiated by official approvals or a clear understanding of the regulatory pathway. This approach risks misrepresenting the project's compliance status and exposing the developer to unforeseen regulatory challenges. Professionals should adopt a decision-making framework that begins with a comprehensive understanding of all applicable Singaporean laws and regulations, including environmental legislation. This should be followed by proactive engagement with regulatory bodies, thorough due diligence regarding potential environmental impacts, transparent communication with clients about all relevant factors, and a commitment to ethical conduct that prioritizes long-term sustainability and compliance over short-term gains. Question 3. During the evaluation of property ownership options for a client in Singapore who is considering purchasing a condominium unit, what is the most accurate and comprehensive explanation a real estate salesperson should provide regarding the distinctions between fee simple and leasehold estates, and how these can be held by multiple owners through joint tenancy or tenancy in common. Option A. Leasehold ownership is always superior to fee simple in Singapore due to government regulations. Joint tenancy means the property automatically goes to the government upon the death of an owner, while tenancy in common allows for individual sale of portions of the unit. Option B. Fee simple and leasehold ownership are essentially the same in Singapore, both offering long-term rights to the property. Joint tenancy and tenancy in common both allow for multiple owners to hold the property without any significant differences in inheritance. Option C. Fee simple ownership grants perpetual rights to the property, while leasehold grants rights for a specific term. Joint tenancy includes a right of survivorship, meaning the surviving owner inherits the deceased share, whereas tenancy in common allows for distinct, divisible shares that can be willed to others. Option D. Fee simple ownership is only applicable to landed properties, and condominiums are exclusively leasehold. Joint tenancy means owners share the property equally, and tenancy in common allows for unequal shares. The correct answer is C. Fee simple ownership grants perpetual rights to the property, while leasehold grants rights for a specific term. Joint tenancy includes a right of survivorship, meaning the surviving owner inherits the deceased share, whereas tenancy in common allows for distinct, divisible shares that can be willed to others. Explanation. This scenario presents a professional challenge because it requires a real estate salesperson in Singapore to accurately advise a client on the implications of different property ownership structures, specifically distinguishing between fee simple and leasehold estates, and understanding how these relate to joint tenancies and tenancies in common. Misunderstanding or misrepresenting these concepts can lead to significant legal and financial repercussions for the client, potentially resulting in disputes, invalid transaction, and damage to the salesperson's reputation and license. Careful judgment is required to ensure the advice provided is legally sound and ethically aligned with the salesperson's duty of care. The best approach involves clearly differentiating between the nature of the ownership rights conferred by fee simple and leasehold estates, and then explaining how these can be held by multiple parties under joint tenancy or tenancy in common. Fee simple ownership represents the highest form of ownership, granting perpetual rights to the property, subject only to government regulations and encumbrances. Leasehold, conversely, grants the right to occupy and use the property for a defined period. Understanding this fundamental distinction is crucial. When multiple parties are involved, the salesperson must explain that joint tenancy implies a right of survivorship, where the surviving joint tenant automatically inherits the deceased share, whereas tenancy in common allows each owner to hold a distinct, divisible share that can be bequeathed to heirs. Providing this detailed, accurate explanation ensures the client can make an informed decision based on their specific needs and intentions regarding inheritance and control. This aligns with the salesperson's ethical obligation to act in the client's best interest and their regulatory duty to provide accurate information as stipulated by the Council for Estate Agencies. C. Guidelines in Singapore. An incorrect approach would be to conflate fee simple with leasehold, perhaps by suggesting that a long-term leasehold estate offers the same perpetual rights as fee simple. This is a fundamental misrepresentation of property law in Singapore and would violate the salesperson's duty to provide accurate information. Another incorrect approach would be to treat joint tenancy and tenancy in common as interchangeable, failing to explain the critical difference in survivorship rights. This oversight could lead to unintended consequences for the client's estate planning and inheritance. Furthermore, a flawed approach would be to focus solely on the duration of ownership, without adequately explaining the nature of the rights associated with each type of estate, thereby providing incomplete and potentially misleading advice. Such failures constitute breaches of professional conduct and regulatory requirements. Professionals should adopt a decision-making framework that prioritizes accurate knowledge of Singapore property law and the CEA's Code of Conduct. This involves continuous professional development to stay abreast of legal nuances, actively seeking clarification on complex matters, and always ensuring that client advice is clear, comprehensive, and factually correct, thereby safeguarding the client's interests and upholding the integrity of the real estate profession. Question 4. In Singapore, a property owner instructs their real estate salesperson to only market their condominium unit to prospective buyers who are of a specific ethnicity, stating it is their personal preference. What factors determine the salesperson's appropriate course of action in this situation? Option A. The salesperson must politely decline the discriminatory instruction. Explain that such requests violate Singapore's fair housing principles and anti-discrimination laws, and offer to market the property ethically and legally. Option B. The salesperson should express sympathy for the owner's preference and suggest they can try to manage the viewings to align with the owner's wishes, without directly stating it's illegal. Option C. The salesperson should proceed with marketing the property as instructed, but only inform the client that such requests are illegal once a potential buyer has been identified and expresses concern. Option D. The salesperson should agree to the client's request and attempt to subtly filter potential buyers based on ethnicity, without explicitly mentioning the owner's preference to them. The correct answer is A. The salesperson must politely decline the discriminatory instruction, explain that such requests violate Singapore's fair housing principles and anti-discrimination laws, and offer to market the property ethically and legally. Explanation. This scenario is professionally challenging because it requires a real estate salesperson in Singapore to navigate the delicate balance between client instructions and the strict legal and ethical obligations under Singapore's fair housing principles, which are embedded within broader anti-discrimination legislation and professional conduct rules. The salesperson must recognize that fulfilling a client's discriminatory request, even if seemingly minor, can lead to serious legal repercussions and damage to their professional reputation. Careful judgment is required to uphold the law and ethical standards while managing client expectations. The best professional approach involves politely but firmly declining the client's discriminatory request and educating them on the legal and ethical implications of their instructions. This approach is correct because it directly adheres to the principles of fair housing and anti-discrimination, as mandated by Singaporean law, and the ethical guidelines set by the Council for Estate Agencies, (C). Specifically, the Estate Agents Act and its subsidiary legislation, along with the CEA's practice circulars on professional conduct, prohibit discrimination in property transactions based on protected characteristics. By refusing to act on the discriminatory instruction and explaining the legal framework, the salesperson upholds their duty to the law and ethical practice, ensuring no discriminatory act occurs. An incorrect approach involves agreeing to the client's request and attempting to subtly implement it without explicit mention of discrimination. This is professionally unacceptable because it still facilitates a discriminatory outcome, even if indirectly. The salesperson becomes complicit in the discriminatory act, violating their duty to uphold fair housing principles and potentially facing penalties under the law for aiding and abetting discrimination. Another incorrect approach is to agree to the request and then inform the client that such requests are illegal only after a potential buyer or tenant has been identified and the discrimination has become apparent. This is professionally unacceptable, as it demonstrates a lack of proactive adherence to legal and ethical obligations. The salesperson has failed to prevent a discriminatory act from occurring in the first place, and their delayed disclosure does not absolve them of responsibility for facilitating the discriminatory process. A further incorrect approach is to express personal agreement with the client's discriminatory preference, but state that they cannot act on it due to potential complaints, without clearly articulating the legal prohibition against discrimination. This is professionally unacceptable because it implies that the primary concern is avoiding complaints rather than upholding fundamental legal and ethical principles. It also fails to adequately educate the client about the illegality of their request, leaving room for them to pursue similar discriminatory actions in the future. The professional reasoning process for such situations should involve 1. Immediately identifying any instruction that appears to violate fair housing or anti-discrimination laws. 2. Consulting relevant legislation and professional conduct guidelines, e.g., Estate Agents Act, CEA practice circulars, to confirm the legal and ethical requirements. 3. Politely but unequivocally refusing to act on the discriminatory instruction. 4. Clearly and respectfully educating the client on the specific legal prohibitions and ethical standards that prevent such actions, emphasizing that discrimination is illegal and unacceptable in Singapore. 5. Offering to proceed with the property transaction in a manner that is compliant with all laws and ethical guidelines. Question 5. The monitoring system demonstrates that a real estate salesperson in Singapore has facilitated the signing of a written agreement between a buyer and a seller. The agreement states that the buyer will pay a certain sum to the seller if, and when the seller decides to sell the property. The salesperson is now being asked by the buyer to confirm the enforceability of this agreement. Considering the principles of contract law in Singapore, which of the following assessments of the agreement's enforceability is most professionally sound? Option A. The agreement is legally enforceable because it is in writing and signed by both parties, indicating a clear intention to be bound. Option B. The buyer has a strong legal claim based on the signed document, as the seller's written intention to sell constitutes sufficient consideration. Option C. The agreement may not be legally enforceable because the consideration offered by the buyer is illusory, as it is contingent on the seller's unilateral decision to sell. Option D. The agreement is enforceable because the salesperson facilitated its signing, implying a valid contractual arrangement. The correct answer is C. The agreement may not be legally enforceable because the consideration offered by the buyer is illusory, as it is contingent on the seller's unilateral decision to sell. Explanation. This scenario is professionally challenging because it requires a real estate salesperson in Singapore to navigate the enforceability of a contract when a key element, the consideration, is ambiguous and potentially illusory. The salesperson must understand the fundamental requirements of a valid contract under Singapore law to advise their client appropriately and avoid potential legal repercussions. The best approach involves clearly identifying that the agreement, as described, likely lacks a crucial element for enforceability. This means recognizing that a contract requires, among other things, valuable consideration passing between the parties. In this case, the promise to pay a sum if and when the seller decides to sell is not a firm commitment but a contingent one, dependent entirely on the seller's unilateral discretion. This makes the consideration illusory, as the buyer is not truly bound to do anything, and the seller is not truly bound to sell. Therefore, the agreement may not constitute a legally binding contract. This aligns with the principles of contract law in Singapore, which, like many common law jurisdictions, requires consideration to be something of value in the eyes of the law, moving from the promisee to the promiser. An illusory promise does not meet this threshold. An incorrect approach would be to assume the agreement is binding simply because it is in writing and signed. While a written agreement is often a good practice and can be evidence of intent, it does not automatically confer enforceability if fundamental contractual elements are missing. The absence of valid consideration is a significant defect that renders the contract unenforceable, regardless of its written form. Another incorrect approach would be to advise the buyer that they have a strong legal claim based on the signed document alone. This overlooks the critical requirement of consideration. Without a clear and enforceable promise from the seller to sell, and a corresponding commitment from the buyer to purchase, the buyer's claim would be weak. The salesperson would be providing misleading advice, potentially exposing themselves and their client to legal disputes. A further incorrect approach would be to suggest that the seller's intention to sell is sufficient consideration. While intention is a starting point, it is the exchange of promises or actions of value that constitutes consideration. A mere statement of intent, without a binding commitment to act upon it, does not constitute legally sufficient consideration to form an enforceable contract. The professional reasoning process should involve a thorough understanding of the essential elements of a contract under Singapore law, including offer, acceptance, intention to create legal relations, and consideration. When presented with an agreement, a salesperson must critically assess whether these elements are present and clearly defined. If there is ambiguity or a potential absence of a key element like consideration, the salesperson should advise their client that the agreement may not be legally enforceable and recommend seeking legal counsel for definitive advice. This proactive and informed approach protects the client, upholds professional standards, and mitigates risks. Question 6. The monitoring system demonstrates that a client is interested in purchasing a commercial property in Singapore with the intention of converting it into a boutique hotel. The client has expressed enthusiasm for the property's location and potential profitability. What is the most responsible course of action for the real estate salesperson to take regarding zoning laws and land use regulations? Option A. Proactively research the property's current zoning and any relevant URA master plan guidelines to determine the feasibility of converting it into a hotel and clearly communicate any restrictions or requirements to the client. Option B. Advise the client that zoning is a minor detail and that such conversions are usually straightforward, focusing primarily on the financial aspects of the potential hotel business. Option C. Interpret the existing commercial zoning regulations and provide the client with a definitive legal opinion on whether the conversion is permissible. Option D. Proceed with marketing the property and facilitating the sale, assuming that a commercial property can be easily converted for hotel use, and leave the zoning verification to the client after the purchase. The correct answer is A. Proactively research the property's current zoning and any relevant URA master plan guidelines to determine the feasibility of converting it into a hotel, and clearly communicate any restrictions or requirements to the client. Explanation. This scenario is professionally challenging because it requires a real estate salesperson in Singapore to navigate the complexities of zoning laws and land use regulations, specifically concerning the Urban Redevelopment Authority, URA master plan, while advising a client. The salesperson must balance the client's aspirations with legal constraints and ethical obligations to provide accurate and responsible guidance. Misinterpreting or misrepresenting these regulations can lead to significant legal repercussions for both the client and the salesperson, including potential fines and loss of license. The best approach involves proactively identifying potential zoning conflicts and advising the client on the implications of the URA master plan. This means thoroughly researching the property's current zoning designation and any future planned developments or restrictions outlined in the URA master plan that might affect the client's intended use or redevelopment. The salesperson should then clearly communicate these findings to the client, explaining how the regulations might impact their investment or plans, and recommend seeking professional advice from relevant authorities or legal counsel if necessary. This aligns with the Estate Agents Act Cap. 95A and its subsidiary legislation, which mandate that property agents must act with honesty and diligence and not mislead clients regarding property matters, including land use restrictions. An incorrect approach would be to assume that the client's intended use is permissible without verifying it against the URA master plan. This failure to conduct due diligence demonstrates a lack of professional responsibility and could lead to the client making an investment based on false premises, violating the duty of care owed to the client. Another incorrect approach is to downplay or ignore potential zoning restrictions, perhaps to secure a sale. This is ethically unsound and directly contravenes the requirement to provide accurate information, can result in the client facing enforcement actions from the URA for noncompliance with land use regulations. Finally, an incorrect approach is to provide definitive legal interpretations of zoning laws. While a salesperson can explain the general implications of the URA master plan, they are not qualified to offer legal advice. This overstepping of professional boundaries can lead to misinterpretations and legal disputes, and it violates the principle of acting within one's scope of expertise. Professionals should adopt a decision-making process that prioritizes thorough research, clear communication, and adherence to regulatory requirements. This involves understanding the client's objectives, diligently investigating all relevant legal and regulatory frameworks, such as the URA master plan, transparently communicating findings and potential implications, and advising clients to seek expert opinions when necessary. Question 7. The risk matrix shows a potential conflict of interest for a Singaporean real estate salesperson who is handling the sale of a property for a client, but the salesperson's close friend is interested in purchasing that property. Which of the following approaches best upholds the salesperson's professional obligations under Singaporean real estate regulations? Option A. Immediately disclose the personal relationship with the potential buyer to the seller and obtain their informed consent before proceeding with any further negotiations or actions related to the sale. Option B. Decline to handle the sale altogether and refer the seller to another salesperson in the agency without mentioning the friend's interest. Option C. Inform the potential buyer of the salesperson's personal relationship with the seller, but not disclose this to the seller, to avoid complicating the negotiation. Option D. Proceed with the sale, focusing solely on achieving the best possible outcome for the seller, and only inform the seller if the friend makes a formal offer. Correct answer is A. Immediately disclose the personal relationship with the potential buyer to the seller and obtain their informed consent before proceeding with any further negotiations or actions related to the sale. Explanation. This scenario presents a professional challenge because it requires a real estate salesperson in Singapore to navigate potential conflicts of interest and ensure transparency, in a transaction involving a close associate. The salesperson must uphold their fiduciary duty to their client while also managing personal relationships, adhering strictly to the principles of the Council for Estate Agencies. C. Code of Conduct and Professional Practice. Careful judgment is required to avoid any perception of impropriety or breach of trust. The best professional practice involves proactively disclosing the relationship to all parties involved and seeking informed consent. This approach acknowledges the potential for a conflict of interest and addresses it head-on by ensuring transparency. By informing the seller of the salesperson's personal connection to the buyer, the salesperson demonstrates integrity and upholds the CEA's requirement for honesty and transparency in all dealings. This allows the seller to make an informed decision about proceeding with the transaction, knowing the salesperson's personal interest. This aligns with the CEA's emphasis on maintaining public trust and professional standards. An incorrect approach would be to proceed with the transaction without disclosing the personal relationship to the seller. This failure to disclose constitutes a breach of the salesperson's duty of honesty and transparency, as mandated by the CEA Code of Conduct. It creates a significant risk of perceived bias and could lead to allegations of misrepresentation or conflict of interest, undermining the seller's trust and potentially leading to disputes. Another incorrect approach is to only inform the buyer about the salesperson's personal relationship with the seller. While this might seem like a partial disclosure, it fails to address the core issue of transparency with the party whose interest the salesperson is primarily representing in the sale. The seller has a right to know if the salesperson has a personal stake in the buyer's success, which could influence the salesperson's advice or negotiation tactics. This selective disclosure is ethically unsound and violates the principle of full transparency. Finally, an incorrect approach would be to delegate the entire negotiation process to another salesperson within the agency without any personal involvement. While this might seem like a way to avoid a direct conflict, it does not fully absolve the salesperson of their ethical obligations. If the salesperson still stands to gain from the transaction, e.g., through commission sharing or referral fees, they must still ensure that the initial relationship and any potential conflicts are properly managed and disclosed to all relevant parties, including the seller, even if they are not directly conducting the negotiations. Professionals should adopt a decision-making framework that prioritizes transparency and client interests. This involves identifying potential conflicts of interest early, understanding the relevant regulatory requirements, such as the CEA Code of Conduct, and proactively communicating with all parties involved to obtain informed consent. When in doubt, seeking guidance from their estate agency or the CEA is a crucial step in ensuring ethical conduct. Question 8. The risk matrix shows a moderate likelihood of significant tenant dissatisfaction due to a persistent minor plumbing issue in a rental property in Singapore. The owner has expressed a strong preference to defer any non-essential repairs to manage immediate cash flow. As a property manager, what is the most prudent course of action? Option A. Advise the tenant that the owner wishes to defer non-essential repairs and suggest they tolerate the minor inconvenience. Option B. Immediately instruct a plumber to fix the issue to prevent further tenant complaints, assuming the owner will approve the expense later. Option C. Conduct a detailed inspection of the plumbing issue, document its current impact on the tenant, research cost-effective repair options, and present a comprehensive report with recommendations to the owner, highlighting both the risks of delay and potential solutions. Option D. Focus solely on the owner's desire to avoid expenditure and inform the tenant that the repair will not be undertaken at this time. The correct answer is C. Conduct a detailed inspection of the plumbing issue, document its current impact on the tenant, research cost-effective repair options, and present a comprehensive report with recommendations to the owner, highlighting both the risks of delay and potential solutions. Explanation. This scenario is professionally challenging because it requires a property manager to balance the immediate financial needs of the owner with their fiduciary duty to maintain the property's long-term value and tenant satisfaction, all within the regulatory framework of Singapore. The property manager must navigate potential conflicts of interest and ensure compliance with the Estate Agents Act and its subsidiary legislations, as well as ethical guidelines set by the Council for Estate Agencies. C. The best professional approach involves a thorough assessment of the property's condition and the tenant's request, followed by a transparent discussion with the owner. This includes providing a detailed report on the necessary repairs, outlining potential long-term implications of delaying them, and presenting cost-effective solutions. The property manager should then present these findings and recommendations to the owner, allowing them to make an informed decision. This approach upholds the property manager's duty of care, transparency, and acting in the best interest of the owner, while ensuring the property remains habitable and attractive to tenants, thereby preventing potential breaches of tenancy agreements and maintaining the property's market value. This aligns with the CEA's ethical guidelines on acting with integrity and competence, an approach that prioritizes the owner's immediate desire to avoid expenditure without a comprehensive assessment is professionally unacceptable. This could lead to significant deterioration of the property, tenant dissatisfaction, potential legal disputes, and ultimately, a decrease in the property's value. It fails to meet the duty of care owed to the owner and could contravene clauses in the tenancy agreement regarding maintenance and habitability. Another professionally unacceptable approach is to proceed with repairs without obtaining the owner's explicit approval, even if the repairs are deemed necessary. This bypasses the owner's right to make decisions regarding their asset and could lead to disputes over costs and the scope of work. It also fails to adhere to the principles of transparency and accountability expected of a property manager. Finally, an approach that solely focuses on tenant satisfaction without considering the owner's financial position or the long-term implications for the property is also flawed. While tenant satisfaction is important, property management also involves safeguarding the owner's investment. A balanced approach is crucial. Professionals should employ a decision-making framework that begins with understanding the client's objectives and constraints, followed by a comprehensive assessment of the situation, identification of potential risks and benefits, consultation with relevant stakeholders, owner, tenant, contractors, and finally, making a recommendation or decision that is legally compliant, ethically sound, and in the best long-term interest of the client. Question 9. Quality control measures reveal that a Singaporean real estate salesperson is handling the tenant selection for a private residential property. Which of the following approaches best exemplifies professional conduct and adherence to best practices in tenant screening? Option A. Making a decision on a tenant's suitability based primarily on a brief personal impression during the viewing, without conducting thorough background checks. Option B. Accepting a tenant without further verification if they are personally known to the salesperson or recommended by a friend, regardless of their financial standing. Option C. Evaluating all prospective tenants based on their verifiable financial capacity, employment stability, and rental history, while ensuring all assessments are objective and non-discriminatory. Option D. Prioritizing tenants who belong to a specific ethnic group or nationality, believing they are more likely to be reliable renters. The correct answer is C. Evaluating all prospective tenants based on their verifiable financial capacity, employment stability, and rental history, while ensuring all assessments are objective and non-discriminatory. Explanation. Scenario analysis. This scenario presents a professional challenge for a Singaporean real estate salesperson because it requires balancing the landlord's desire for a reliable tenant with the legal and ethical obligations to avoid discriminatory practices. The salesperson must navigate the selection process diligently while adhering to the principles of fairness and non-discrimination as mandated by Singaporean law and professional conduct guidelines. Failure to do so can result in reputational damage, legal penalties, and disciplinary action from the Council for Estate Agencies. C. Correct approach analysis. The best approach involves a systematic evaluation of all prospective tenants based on objective, financially relevant criteria. This includes verifying their financial stability through income checks, employment verification, and creditworthiness assessments. It also involves understanding their rental history and references to gauge their reliability as tenants. This method ensures that decisions are made on legitimate grounds that directly relate to the tenant's ability to meet their rental obligations, thereby complying with the principles of fair housing and professional integrity expected of a Singaporean real estate salesperson. Incorrect approaches analysis. One incorrect approach involves making assumptions about a prospective tenant's ability to pay rent based on their perceived ethnicity or nationality. This is a direct violation of Singapore's anti-discrimination principles and could lead to accusations of unfair housing practices. Another unacceptable approach is to solely rely on subjective impressions or personal biases, such as a tenant's appearance or demeanor, without conducting thorough due diligence. This lacks objectivity and can lead to discriminatory outcomes. Furthermore, accepting a tenant solely based on a personal recommendation without independent verification of their financial standing and rental history is also professionally unsound. It bypasses essential screening steps and could expose the landlord to risk. Professional reasoning. Professionals in Singapore should adopt a structured and objective tenant screening process. This involves developing a standardized checklist of criteria that are applied consistently to all applicants. Key considerations include financial capacity, income, employment stability, rental history references, past landlord feedback, and any relevant legal requirements or landlord preferences that do not infringe on anti-discrimination laws. The salesperson's role is to facilitate this objective assessment, ensuring that the landlord makes an informed decision based on merit and suitability, rather than on prejudice or incomplete information. Question 10. The risk matrix shows a property in Singapore with a high likelihood of flooding and a moderate impact on structural integrity. A potential buyer has expressed interest, but the property has a history of minor flood damage. What is the most professional and legally compliant approach for the real estate salesperson to take? Option A. State that the property has a history of flooding, but avoid discussing the specifics of the damage or any potential costs, as this might deter the buyer. Option B. Provide the buyer with a detailed report outlining the property's flood history, the extent of past damage, any mitigation measures taken, and estimated costs for potential future repairs or preventative actions, while also advising them to seek independent professional advice. Option C. Advise the buyer that flood risk is a common issue in the area and that they should conduct their own thorough investigations and assessments without the salesperson providing specific details. Option D. Emphasize the property's attractive features and mention briefly that it has experienced minor flooding in the past, suggesting the buyer can research further if they wish. The correct answer is B. Provide the buyer with a detailed report outlining the property's flood history, the extent of past damage, any mitigation measures taken, and estimated costs for potential future repairs or preventative actions, while also advising them to seek independent professional advice. Explanation. The risk matrix shows a property with a high likelihood of flooding and a moderate impact on structural integrity. This scenario is professionally challenging because it requires a real estate salesperson in Singapore to balance their duty to disclose material facts with their obligation to secure a sale, all while adhering to the Council for Estate Agencies, c. Regulations and the Estate Agents Act. Misrepresenting the property's condition or failing to disclose significant risks can lead to severe penalties, including fines and license revocation. The best approach involves a transparent and thorough disclosure of the flood risk and its potential impact. This includes providing the potential buyer with all available documentation regarding past flooding incidents, any mitigation measures already in place, and the estimated costs associated with potential repairs or preventative actions. This approach is correct because it directly aligns with the CEA's guidelines on professional conduct and the Estate Agents Act, which mandate the disclosure of all material facts that could influence a buyer's decision. Ethical practice dictates that a salesperson must act in the best interest of their client, which includes ensuring they are fully informed about potential risks. An approach that downplays the flood risk and focuses solely on the property's aesthetic appeal is professionally unacceptable. This constitutes a failure to disclose a material fact, violating the salesperson's duty of care and potentially misleading the buyer. Such an action could lead to legal repercussions and damage to the salesperson's reputation. Another unacceptable approach is to simply state that the property has flooded in the past without providing any context or details about the severity, frequency, or any mitigation efforts. This superficial disclosure does not equip the buyer with sufficient information to make an informed decision and still falls short of the duty to disclose material facts comprehensively. Finally, an approach that suggests the buyer should conduct their own independent investigations without the salesperson proactively providing all known information is also flawed. While buyers are encouraged to perform due diligence, the salesperson has an affirmative duty to disclose known material facts. Shifting the entire burden of discovery onto the buyer without providing readily available information is not in line with professional standards. Professionals should adopt a decision-making process that prioritizes transparency and full disclosure. This involves 1. Identifying all known material facts about the property, including potential risks and defects. 2. gathering all relevant documentation and information pertaining to these facts. 3. Communicating these facts clearly and comprehensively to the potential buyer, using language they can understand. 4. Documenting all disclosures made. 5. Consulting with relevant professionals, e.g., surveyors, engineers, if the impact of a risk is unclear. Question 11. Stakeholder feedback indicates that some Singaporean real estate salespersons are encountering clients who are exploring alternative financing methods beyond traditional bank loans. A client is seeking to purchase a property quickly and is considering either a hard money loan or seller financing. What is the most responsible and ethically sound approach for a Singaporean real estate salesperson to take in advising this client? Option A. Emphasize the speed and ease of obtaining a hard money loan, as this will facilitate a quicker transaction and potentially higher commission for the salesperson. Option B. Recommend seller financing as the simpler option, focusing on the potential for flexible terms without thoroughly investigating the client's long-term financial capacity or the specifics of the seller's agreement. Option C. Provide a detailed explanation of both hard money loans and seller financing, outlining the associated risks, benefits, and typical terms, and strongly advise the client to seek independent financial and legal counsel before making a decision. Option D. Advise the client to proceed with the financing option that the salesperson believes will result in the most favorable outcome for the seller, as this often leads to a smoother closing process. The correct answer is C. Provide a detailed explanation of both hard money loans and seller financing, outlining the associated risks, benefits, and typical terms, and strongly advise the client to seek independent financial and legal counsel before making a decision. Explanation. This scenario presents a professional challenge for a Singaporean real estate salesperson because it requires balancing the client's immediate financial needs with the salesperson's ethical obligations and the regulatory framework governing property transactions in Singapore. The salesperson must ensure that the client fully understands the implications of different financing options, particularly those that carry higher risks, and that the chosen method aligns with their financial capacity and risk tolerance. Misrepresenting or inadequately explaining these options can lead to significant financial distress for the client and potential breaches of professional conduct and regulatory guidelines. The best approach involves thoroughly educating the client about the nature, risks, and implications of both hard money loans and seller financing, and then recommending the option that best aligns with their stated financial goals and risk profile, while also ensuring the client seeks independent financial advice. This aligns with the Council for Estate Agencies, c. Guidelines on Professional Conduct, which emphasize the salesperson's duty to act in the best interests of their clients. By providing comprehensive information and encouraging independent advice, the salesperson facilitates an informed decision, mitigating potential future disputes and ensuring compliance with the spirit of fair dealing. This approach prioritizes client welfare and upholds the integrity of the real estate profession, an approach that focuses solely on securing the transaction by highlighting the speed of hard money loans without adequately detailing the high interest rates, short repayment terms, and potential for foreclosure is ethically flawed. This neglects the salesperson's duty to ensure the client understands the full financial burden and risks associated with such a loan, potentially leading to a client who is over-leveraged and unable to meet repayment obligations. This failure to provide a balanced and complete picture violates the principle of acting in the client's best interest. Another unacceptable approach is to exclusively promote seller financing as a simple solution, without exploring the client's long-term financial stability or the potential for the seller to impose unfavorable terms. This overlooks the importance of due diligence on the client's ability to service the debt over the long term, and the need for independent legal advice to review the seller financing agreement, which could expose the client to unforeseen liabilities or restrictive covenants. Finally, an approach that pressures the client into a specific financing option based on the salesperson's personal gain or convenience, without a thorough assessment of the client's needs and the risks involved, is a clear breach of professional ethics and CEA guidelines. This prioritizes the salesperson's interests over the client's, undermining trust and potentially leading to detrimental financial outcomes for the client. Professionals should adopt a decision-making process that begins with a comprehensive understanding of the client's financial situation, objectives, and risk appetite. This should be followed by a clear, unbiased explanation of all viable financing options, including their respective advantages, disadvantages, costs, and risks, referencing relevant Singaporean regulations. Crucially, professionals must encourage clients to seek independent financial and legal advice before committing to any financing arrangement, thereby empowering the client to make an informed decision that safeguards their financial well-being. Question 12. Governance review demonstrates that a Singaporean real estate salesperson is advising a client on the sale of a standard terrace house in a mature estate. The salesperson needs to determine the most accurate and market-relevant valuation for the property. Which valuation method should be prioritized and why? Option A, cost approach. Option B, comparative market analysis. Option C, replacement cost method. Option D, income approach. Correct answer is B, comparative market analysis. Explanation: scenario analysis. This scenario presents a professional challenge for a Singaporean real estate salesperson because it requires them to select the most appropriate valuation method for a unique property type. The salesperson must demonstrate a deep understanding of the strengths and limitations of each valuation approach in the context of Singapore's property market and regulatory environment, ensuring they provide accurate and ethically sound advice to their client. Failure to do so could lead to misinformed decisions by the client, potential disputes, and breaches of professional conduct under the Council for Estate Agencies (C) guidelines. Correct approach analysis. The most appropriate approach in this scenario is the comparative market analysis. This method is best suited for residential properties, especially those with a good number of comparable sales in the immediate vicinity. It involves analyzing recent sales of similar properties in the same or a very similar neighborhood, adjusting for differences in features, condition, and location. In Singapore, where the property market is active and data on recent transactions is generally available through sources like the Urban Redevelopment Authority, URA, and the Singapore Land Authority, SLA. This method provides a realistic reflection of current market value. The CEA's Code of Ethics and Professional Conduct mandates that salespersons act honestly and with integrity, which includes providing advice based on the most relevant and reliable valuation methods for the specific property type. Incorrect approaches analysis. Using the income approach would be inappropriate for a typical owner-occupied residential property, as it primarily focuses on the potential rental income the property could generate. While applicable to investment properties, it does not accurately reflect the market value for a homeowner who is not primarily concerned with rental yields. This could lead to an inaccurate valuation and misguide the client's expectations or decisions. Employing the cost approach, which estimates the cost to replace the property, is generally less suitable for established residential properties in Singapore. This method is more relevant for new constructions or unique properties where comparable sales are scarce. For older homes, it fails to account for market demand, desirability, and the specific nuances of the Singaporean property market that influence value beyond mere replacement cost. It can significantly over or understate the true market value. Professional reasoning. A Singaporean real estate salesperson should approach property valuation by first understanding the property type and its intended use. For standard residential properties, the comparative market analysis is the primary tool due to its direct reflection of market sentiment and recent transactional data. If the property has unique characteristics or is an investment property, the salesperson should then consider the income approach or cost approach, but only after thoroughly assessing their applicability and limitations in the Singaporean context. Transparency with the client about the chosen method and its rationale is crucial, aligning with the CEA's emphasis on professional competence and client best interests. Question 13. Cost-benefit analysis shows that a quick lease signing can benefit the landlord by securing a tenant faster. But what is the most responsible course of action for a Singaporean real estate salesperson when a prospective tenant expresses confusion about several clauses in a standard tenancy agreement for a HDB flat? Option A. Thoroughly explain each clause, clarify the tenant's understanding, and advise them to seek legal counsel if necessary before signing. Option B. Highlight only the favorable terms of the lease and gloss over the clauses that might be less advantageous to the tenant. Option C. Urge the tenant to sign the agreement promptly to secure the unit, emphasizing the benefits of a quick transaction. Option D. Present the lease agreement for the tenant to sign, assuming they will read and understand it independently. The correct answer is A. Thoroughly explain each clause, clarify the tenant's understanding, and advise them to seek legal counsel if necessary before signing. Explanation. Scenario analysis. This scenario is professionally challenging because it requires the salesperson to balance the client's immediate desire for a quick transaction with the legal and ethical obligations to ensure a fair and transparent lease agreement. Misrepresenting terms or pressuring a tenant into an unfavorable agreement can lead to significant legal repercussions, reputational damage, and breaches of professional conduct under Singaporean law and the Council for Estate Agencies (C) guidelines. The salesperson must navigate the tenant's potential lack of understanding of complex lease clauses and ensure their informed consent. Correct approach analysis. The best professional practice involves thoroughly explaining all key terms and conditions of the lease agreement to the tenant, ensuring they understand their rights and obligations. This includes clarifying the duration of the lease, rent payment schedule and penalties, responsibilities for maintenance and repairs, any restrictions on property use, and the conditions for lease termination. The salesperson should encourage the tenant to seek independent legal advice if they have any doubts or wish to negotiate terms. This approach aligns with the CEA's guidelines on professional conduct, which emphasize honesty, transparency, and acting in the best interests of all parties involved in a property transaction. It upholds the principle of informed consent, a cornerstone of fair dealings in real estate. Incorrect approach is analysis. One incorrect approach is to simply present the lease agreement for the tenant to sign without detailed explanation, assuming they will read and understand it themselves. This fails to meet the salesperson's duty of care and transparency. It can lead to the tenant agreeing to terms they do not fully comprehend, potentially resulting in disputes and breaches of the lease, and contravenes the CEA's expectations for professional advice and assistance. Another incorrect approach is to downplay or omit the discussion of clauses that might be unfavorable to the tenant, such as strict late payment penalties or limited options for early termination. This constitutes a misrepresentation of the lease terms and is unethical. It violates the principle of full disclosure and can lead to the tenant feeling misled, resulting in complaints to the CEA and potential legal action. A third incorrect approach is to pressure the tenant to sign the agreement quickly by highlighting only the positive aspects and rushing through the review process. This creates an environment where the tenant cannot make an informed decision. It is a breach of professional ethics and potentially illegal, as it may be construed as undue influence or misrepresentation, undermining the tenant's ability to exercise their rights. Professional reasoning. Professionals should adopt a framework that prioritizes client education and transparency. This involves proactively identifying potential areas of confusion for the client, dedicating sufficient time to explain all contractual obligations and rights, and encouraging independent review. The salesperson's role is to facilitate an informed transaction, not to expedite it at the expense of clarity and fairness. Adherence to the CEA's Code of Ethics and Professional Conduct is paramount. Question 14. Compliance review shows that a licensed real estate salesperson in Singapore is facing a prolonged personal medical emergency that will significantly limit their ability to attend CPD courses and complete the required CPD units before their license renewal date. What is the most appropriate course of action for the salesperson to ensure continued compliance with the Council for Estate Agencies (C) regulations? Option A. Attempt to complete all outstanding CPD units in a condensed period immediately after the personal medical emergency, regardless of the quality or relevance of the courses, to meet the deadline. Option B. Immediately contact the Council for Estate Agencies (C) to explain the personal circumstances and inquire about any possible extensions or alternative arrangements for fulfilling the CPD requirements. Option C. Assume that the personal medical emergency will be considered a valid reason for exemption from CPD requirements and proceed with the license renewal application without addressing the shortfall. Option D. Postpone addressing the CPD requirement until after the personal medical emergency has resolved, hoping that the CEA will grant a retroactive waiver upon renewal. The correct answer is B. Immediately contact the Council for Estate Agencies (C) to explain the personal circumstances and inquire about any possible extensions or alternative arrangements for fulfilling the CPD requirements. Explanation. This scenario presents a professional challenge because it requires a real estate salesperson in Singapore to navigate the licensing renewal process while facing a temporary personal circumstance that could impact their ability to meet the continuing professional development (CPD) requirements. Careful judgment is required to ensure compliance with the Council for Estate Agencies (C) regulations without jeopardizing their license. The best professional practice involves proactively communicating with the CEA and seeking guidance on the specific requirements and potential accommodations. This approach demonstrates a commitment to regulatory compliance and ethical conduct. By informing the CEA of the situation and inquiring about any available options or extensions for completing CPD units, the salesperson acts responsibly. The CEA's guidelines, particularly those pertaining to license renewal and CPD, emphasize the importance of maintaining professional competency. Proactive communication ensures that the salesperson understands their obligations and can make informed decisions to fulfill them, even under challenging personal circumstances. This aligns with the ethical duty to uphold the integrity of the real estate profession. An incorrect approach involves assuming that a temporary personal difficulty automatically excuses the salesperson from fulfilling their CPD obligations. This overlooks the regulatory framework established by the CEA, which mandates CPD for all licensed salespersons to ensure they remain knowledgeable and competent. Failing to engage with the CEA or explore potential solutions demonstrates a disregard for these requirements and could lead to license suspension or revocation. Another incorrect approach is to delay addressing the CPD requirement until the last minute, or to assume that the license will be renewed without full compliance. This reactive stance is unprofessional and risky. The CEA expects salespersons to manage their CPD proactively throughout the licensing period, not just as a deadline looms. Such inaction can result in an inability to meet the renewal criteria, jeopardizing their ability to practice. Finally, an incorrect approach is to attempt to complete CPD units in a rushed or superficial manner solely to meet the requirement, without genuine engagement with the learning content. While this might technically fulfill the unit count, it undermines the purpose of CPD, which is to enhance professional knowledge and skills. This approach is ethically questionable as it prioritizes form over substance and does not uphold the professional standards expected by the CEA and the public. Professionals should adopt a proactive and communicative decision-making framework. When faced with circumstances that might impact regulatory compliance, the first step should always be to understand the specific requirements of the relevant authority, in this case, the C. This involves reviewing the official guidelines and, if necessary, contacting the authority directly for clarification or to discuss potential accommodations. Documenting all communications and actions taken is also crucial for demonstrating due diligence. Question 15. Market research demonstrates a growing demand for flexible workspaces that can accommodate both administrative functions and light assembly operations. A client in Singapore is seeking to purchase a property for such a purpose and has identified a building with ample office space and a large, open-plan area at the rear. The client believes this rear area could be easily adapted for light manufacturing and assembly. What is the most appropriate course of action for a licensed Singaporean real estate salesperson? Option A. Recommend the property based on its current layout and the client's stated intention to use the rear area for light assembly, assuming that such use is permissible given the ample space. Option B. Advise the client to verify the property's official zoning classification and permitted land use with the Urban Redevelopment Authority, URA, and conduct due diligence on any specific conditions or restrictions related to industrial activities before proceeding with a purchase. Option C. Focus the client's attention on the office space suitability and downplay the potential challenges of using the rear area for industrial purposes, emphasizing the property's overall appeal. Option D. Suggest that the client proceed with the purchase and then seek retrospective approval from the URA for the intended light assembly operations, as the space appears suitable. The correct answer is B. Advise the client to verify the property's official zoning classification and permitted land use with the Urban Redevelopment Authority, URA, and conduct due diligence on any specific conditions or restrictions related to industrial activities before proceeding with a purchase. Question 16. Analysis of a real estate salesperson's responsibilities in Singapore regarding property financing options for a buyer. What is the most ethically sound and professionally recommended approach when discussing mortgage solutions? Option A. Recommend a specific bank or loan package that the salesperson has a prior positive experience with, believing it to be a good option for the buyer. Option B. Focus on the financing options that offer the salesperson the highest commission or referral fee, guiding the buyer towards those products. Option C. Educate the buyer on the general types of mortgage loans available in Singapore, their typical features, and strongly advise them to consult with independent mortgage brokers or banks for personalized financial advice and loan applications. Option D. Provide a brief, high-level overview of financing without detailing specific loan types or their implications, assuming the buyer will figure out the specifics. The correct answer is C. Educate the buyer on the general types of mortgage loans available in Singapore, their typical features, and strongly advise them to consult with independent mortgage brokers or banks for personalized financial advice and loan applications. Explanation. This scenario presents a professional challenge because a real estate salesperson in Singapore must navigate the complexities of property financing options while ensuring they act in the best interest of their client and adhere to the regulations set forth by the Council for Estate Agencies. C. Misrepresenting financing options or failing to provide accurate information can lead to significant financial and legal repercussions for both the client and the salesperson, and can result in disciplinary action from the CEA. The salesperson's duty is to facilitate an informed decision for the buyer, not to steer them towards a particular loan product based on personal gain or incomplete understanding. The best professional approach involves a comprehensive understanding of various mortgage products available in Singapore, including their terms, interest rates, repayment structures, and eligibility criteria. A salesperson should proactively educate the client on these different options, highlighting the pros and cons of each in relation to the client's financial situation and property goals. This includes advising the client to seek independent financial advice from mortgage brokers or banks to secure the most suitable loan. This approach aligns with the CEA's guidelines on professional conduct and ethical practice, which emphasize honesty, transparency, and the duty to act in the client's best interest. It empowers the client to make an informed decision based on expert financial counsel and a clear understanding of their choices. An approach that involves recommending a specific bank or loan package without a thorough understanding of the client's financial profile or without advising them to explore other options is professionally unacceptable. This could be construed as a conflict of interest or a failure to act with due diligence, potentially violating the salesperson's fiduciary duty to the client. Such an action may also breach CEA regulations concerning misrepresentation or misleading information. Another professionally unacceptable approach is to provide a simplified overview of financing without delving into the specifics of different loan types, such as fixed-rate versus variable-rate mortgages, or the implications of loan-to-value ratios. This superficial advice fails to equip the client with the necessary knowledge to make a sound financial decision, potentially leading them to choose a loan product that is not optimal for their circumstances. This lack of detailed guidance falls short of the professional standard expected of a real estate salesperson in Singapore. Finally, an approach that focuses solely on the salesperson's commission or incentives tied to a particular financing product, rather than the client's best interests, is unethical and a clear violation of professional conduct. This prioritizes personal gain over client welfare and undermines the trust inherent in the client-salesperson relationship. Professionals should adopt a decision-making framework that prioritizes client education and empowerment. This involves first understanding the client's financial capacity and objectives, then providing a broad overview of available financing avenues in Singapore, and crucially, strongly recommending that the client consult with qualified mortgage professionals or financial institutions for personalized advice and loan application. The salesperson's role is to facilitate the property transaction, not to act as a financial advisor, and to ensure the client is well-informed and independently advised on financing matters. Question 17. The review process indicates that a salesperson in Singapore needs to enhance their understanding of how prevailing economic conditions can influence property market sentiment and client decision-making. A potential buyer expresses concern about rising interest rates and their potential impact on mortgage affordability and future property values. Which of the following represents the most professional and ethically sound approach for the salesperson to take? Option A. Proactively research current economic indicators relevant to Singapore's property market, such as interest rate trends, inflation, and government housing policies, and then discuss these factors with the client, outlining potential impacts on affordability and market dynamics in a balanced and objective manner, without making definitive predictions. Option B. Assure the client that rising interest rates will inevitably lead to a significant drop in property prices, encouraging them to wait for a more opportune moment to purchase. Option C. Advise the client that economic factors have no bearing on individual property transactions and that they should focus solely on their immediate housing needs. Option D. Dismiss the client's concerns about economic factors, stating that their role is to facilitate the transaction and that economic analysis is beyond their scope of expertise. The correct answer is A. Proactively research current economic indicators relevant to Singapore's property market, such as interest rate trends, inflation, and government housing policies, and then discuss these factors with the client, outlining potential impacts on affordability and market dynamics in a balanced and objective manner, without making definitive predictions. Explanation. The review process indicates a need to assess a real estate salesperson's understanding of how broader economic shifts impact the Singapore property market and their ethical obligations in advising clients. This scenario is professionally challenging because it requires the salesperson to move beyond simply listing properties and instead act as a trusted advisor, interpreting complex economic data and its implications for client investment decisions. Failure to do so can lead to misinformed clients, potential financial losses for them, and damage to the salesperson's reputation and the industry's integrity. Careful judgment is required to balance providing informed advice with avoiding speculative predictions or guarantees. The best professional practice involves a salesperson proactively researching and understanding current macroeconomic trends relevant to Singapore's real estate market, such as interest rate movements, inflation, and government housing policies. This salesperson should then synthesize this information to provide clients with a balanced overview of potential market impacts, highlighting both opportunities and risks without making definitive predictions. This approach is correct because it aligns with the Council for Estate Agencies, see Guidelines on Professional Conduct, and the duty of care owed to clients. Salespersons are expected to possess a reasonable level of market knowledge and to communicate this knowledge effectively and ethically, enabling clients to make informed decisions. This proactive and informative stance fosters transparency and trust. An incorrect approach would be to dismiss the client's concerns about economic factors, suggesting that market conditions are irrelevant to their specific property search. This fails to acknowledge the interconnectedness of the economy and the property market and neglects the salesperson's duty to provide comprehensive advice. Ethically, this approach is deficient as it prioritizes closing a deal over ensuring the client's understanding of potential risks. Another incorrect approach involves the salesperson making definitive predictions about future property price movements based on their interpretation of economic data, assuring the client that prices will rise or fall by a specific margin. This is professionally unacceptable as it constitutes speculation and potentially misrepresentation. Real estate markets are inherently uncertain, and making such guarantees is not only unethical but also likely to violate CEA regulations regarding misleading statements. A third incorrect approach is for the salesperson to claim ignorance of economic factors, stating that their role is solely transactional and that economic analysis is outside their purview. This demonstrates a lack of professional development and a failure to meet the expected standards of market knowledge required by the CEA. It abdicates the responsibility to guide clients through a complex decision-making process that is significantly influenced by economic conditions. The professional reasoning process for similar situations should involve a commitment to continuous learning about market dynamics, including economic influences. When faced with client inquiries about economic factors, a salesperson should first actively listen to and acknowledge the client's concerns. They should then access reliable sources of economic data and analysis relevant to Singapore's property market. The information should be presented to the client in a clear, objective, and balanced manner, outlining potential impacts and associated risks and opportunities. Crucially, the salesperson must avoid making guarantees or definitive predictions, instead empowering the client to make their own informed decisions based on the provided context and their personal financial situation. Question 18. Performance analysis shows that a real estate salesperson in Singapore is representing a seller. During the final stages of negotiation, a potential buyer's independent surveyor identifies significant structural issues with the property. The seller, eager to close the sale quickly, asks the salesperson if they can proceed without formally disclosing these issues to the buyer, hoping the buyer might not pursue them further. What is the best course of action for the salesperson? Option A. Encourage the seller to accept the buyer's offer immediately and proceed with the sale, assuming the buyer will likely overlook the surveyor's findings. Option B. Advise the seller to downplay the severity of the structural issues in the disclosure statement to expedite the sale. Option C. Suggest to the seller that they only disclose the structural issues if the buyer specifically asks about them during the final walkthrough. Option D. Advise the seller that all identified structural issues must be disclosed to the buyer in writing as part of the property's disclosure statement, and recommend the seller address these findings with the buyer. The correct answer is D. Advise the seller that all identified structural issues must be disclosed to the buyer in writing as part of the property's disclosure statement, and recommend the seller address these findings with the buyer. Explanation. Scenario analysis. This scenario is professionally challenging because it involves a potential conflict of interest and a breach of fiduciary duty. A salesperson owes a duty of loyalty and care to their client, the seller. Misrepresenting the property's condition or withholding material information to secure a quick sale for personal gain undermines this duty and can lead to legal repercussions and damage to the salesperson's reputation and the agency's standing. The salesperson must navigate the pressure to close a deal while upholding their ethical and legal obligations under Singaporean law. Correct approach analysis. The best professional practice is to advise the seller truthfully about the structural issues identified by the potential buyer's surveyor, and to recommend that the seller disclose these issues to all prospective buyers, including the current buyer. This approach aligns with the Estate Agents Act (Cap. 95A) and its associated regulations, which mandate honesty and transparency in property transactions. Specifically, Section 48 of the Act prohibits misrepresentation and requires agents to act with due diligence and integrity. Ethically, this upholds the salesperson's fiduciary duty to their client, ensuring they are making informed decisions based on accurate information. Transparency builds trust and protects all parties involved from future disputes and legal liabilities. Incorrect approaches analysis. Advising the seller to downplay or omit the structural issues from the disclosure statement to expedite the sale is a direct violation of the Estate Agents Act. This constitutes misrepresentation and a failure to act with due diligence. It breaches the salesperson's duty to their client and potentially deceives the buyer, leading to legal consequences for both the salesperson and the seller, and disciplinary action from the Council for Estate Agencies, c. Suggesting the seller only disclose the issues if directly asked by the buyer, rather than proactively including them in the official disclosure, is also a failure to meet the standards of transparency required by Singaporean real estate law. While not an outright lie, it is a deliberate omission of material information that could influence a buyer's decision, thereby failing the duty of full disclosure. This approach risks the transaction being voidable and exposes the salesperson to penalties. Focusing solely on securing the sale and encouraging the seller to accept the offer without addressing the surveyor's findings, assuming the buyer might overlook them, demonstrates a severe lack of professional integrity and a disregard for legal obligations. This prioritizes personal commission over the client's best interests and the legal requirements of a property transaction, exposing the salesperson to significant liability and disciplinary action. Professional reasoning. Professionals should always prioritize honesty, transparency, and adherence to the law. When faced with information that could impact a transaction, the decision-making process should involve 1. Identifying the material fact, the structural issues. 2. Recalling the legal and ethical obligations, duty of disclosure, prohibition of misrepresentation under the Estate Agents Act. 3. Consulting with the client, the seller, to ensure they understand the implications and legal requirements. 4. Recommending the legally compliant and ethically sound course of action, full disclosure. If the client insists on a non-compliant approach, the salesperson must refuse to participate and consider withdrawing from the transaction. Question 19. The monitoring system demonstrates that a client in Singapore is interested in purchasing a property. They have expressed a desire to understand the different ways they can own the property, specifically asking about perpetual ownership versus ownership for a set period, and how they and their partner would hold the title together. What is the most accurate and professionally responsible way for a Singaporean real estate salesperson to explain these concepts? Option A. Explain that perpetual ownership refers to a fee-simple estate, which grants the highest form of ownership rights, and that ownership for a set period refers to a leasehold estate. Then, clarify that joint tenancy means ownership automatically passes to the surviving owner, while tenancy in common allows for individual shares to be willed separately, and that these co-ownership forms can apply to both fee-simple and leasehold properties. Option B. Advise the client that perpetual ownership is always a joint tenancy, and ownership for a set period is always a tenancy in common, as these are the primary distinctions in Singaporean property law. Option C. Inform the client that fee-simple ownership is only available for leasehold properties, and that joint tenancy is the only legal way for couples to own property together in Singapore. Option D. Focus solely on explaining the difference between joint tenancy and tenancy in common, assuming the client understands the underlying estate type, and mention that leasehold is a type of joint ownership. The correct answer is A. Explain that perpetual ownership refers to a fee-simple estate, which grants the highest form of ownership rights, and that ownership for a set period refers to a leasehold estate. Then, clarify that joint tenancy means ownership automatically passes to the surviving owner, while tenancy in common allows for individual shares to be willed separately, and that these co-ownership forms can apply to both fee-simple and leasehold properties. Explanation. This scenario presents a professional challenge because it requires a real estate salesperson in Singapore to accurately advise a client on the implications of different property ownership structures, specifically distinguishing between fee-simple and leasehold estates, and understanding how these relate to joint tenancies and tenancies in common. Misunderstanding these concepts can lead to significant legal and financial consequences for the client, impacting their rights, obligations, and the future disposition of the property. Careful judgment is required to ensure the advice provided is legally sound and ethically aligned with the salesperson's duty of care. The best professional approach involves clearly differentiating between the nature of the ownership estate, fee-simple versus leasehold, and the form of co-ownership, joint tenancy versus tenancy in common. Fee-simple ownership in Singapore represents the highest form of ownership, granting perpetual rights to the property, subject to legal encumbrances and government regulations. Leasehold, conversely, involves ownership for a defined period, typically granted by the state or a freeholder, understanding that joint tenancy implies a right of survivorship, where the surviving co-owner automatically inherits the deceased's share, and tenancy in common allows for individual shares to be willed separately is crucial. Advising the client by first clarifying the type of estate they are acquiring, fee-simple or leasehold, and then explaining how they intend to hold it, jointly or in common, provides a comprehensive and accurate understanding of their property rights and responsibilities under Singaporean law, such as the Conveyancing and Law of Property Act. An incorrect approach would be to conflate the type of estate with the form of co-ownership. For instance, assuming that all fee-simple properties are automatically held under joint tenancy, or that leasehold properties cannot be held as tenants in common, demonstrates a fundamental misunderstanding of property law principles in Singapore. This could lead to the client making decisions based on inaccurate information, potentially resulting in unintended inheritance outcomes or disputes among co-owners. Another failure would be to provide advice without first ascertaining the client's specific intentions regarding co-ownership, thereby failing to tailor the explanation to their needs and potentially offering irrelevant or misleading information. Professionals should adopt a systematic decision-making process. This begins with active listening to understand the client's needs and objectives. Subsequently, the salesperson must draw upon their knowledge of Singaporean property law, specifically the distinctions between fee-simple and leasehold estates, and the implications of joint tenancy versus tenancy in common. The advice should then be communicated clearly and concisely, using plain language, and confirming the client's understanding. If there is any doubt about the complexity of the situation or the client's comprehension, seeking clarification from legal professionals or referring the client to them is an essential part of ethical practice. Question 20. Investigation of a property in Singapore reveals a proposed government-led environmental remediation project for a nearby industrial site, as detailed in a preliminary environmental impact assessment report. The report indicates potential soil and groundwater contamination that may require significant cleanup over an estimated 18-month period, with associated costs to be borne by the government but potentially impacting surrounding property values due to perceived risks and temporary disruptions. A client wishes to list their property for sale immediately and is concerned about any delays or price reductions. The property's current market valuation prior to this report was $1,500,000. The salesperson estimates, based on preliminary research and comparable market data for properties affected by similar past projects, that the remediation could lead to a 5% to 10% decrease in market value during the remediation period. What is the most appropriate course of action for the Singaporean real estate salesperson? Option A. Advise the client that the remediation project may reduce the property's market value by an estimated 7.5% during the cleanup period. Recommend adjusting the asking price accordingly, and provide a detailed breakdown of how this estimate was derived from the environmental report and market comparables, while also discussing potential market recovery post-remediation. Option B. Advise the client to wait until the environmental remediation project is fully completed and its long-term impact is definitively known before listing the property, even if this means a significant delay in their selling timeline. Option C. Recommend listing the property at the original valuation of $1,500,000, highlighting the government's responsibility for cleanup costs to reassure the client, and downplaying the potential impact on market value to facilitate a quicker sale. Option D. Inform the client that the environmental report is a preliminary document and its impact is speculative, suggesting they proceed with the original asking price and address any valuation issues if they arise during the sale process. Correct answer is A. Advise the client that the remediation project may reduce the property's market value by an estimated 7.5% during the cleanup period. Recommend adjusting the asking price accordingly, and provide a detailed breakdown of how this estimate was derived from the environmental report and market comparables, while also discussing potential market recovery post-remediation. Explanation. This scenario presents a professional challenge for a Singaporean real estate salesperson due to the interplay between environmental regulations, property valuation, and client disclosure obligations. The salesperson must navigate the potential impact of a proposed environmental remediation project on the market value of a property and ensure transparency with the client. Careful judgment is required to balance the client's desire for a quick sale with the ethical and legal duty to provide accurate information. The best approach involves a thorough assessment of the environmental report and its quantifiable impact on the property's value, followed by clear communication with the client. This aligns with the Council for Estate Agencies (C) guidelines, which mandate that salespersons must act honestly and with integrity and disclose all material facts that could affect a client's decision. Specifically, the Environmental Protection and Management Act (EPMA) in Singapore governs environmental matters, and any remediation efforts would be subject to its provisions. Understanding the scope, timeline, and cost of remediation, and translating this into a realistic valuation adjustment, is crucial. This approach prioritizes informed decision-making for the client, upholding professional standards. An incorrect approach would be to dismiss the environmental report without proper investigation, assuming it will have no significant impact. This fails to acknowledge the potential legal and financial ramifications of environmental issues, which are increasingly scrutinized under Singaporean law. It also breaches the duty of care to the client by not proactively identifying and assessing potential risks. Another incorrect approach is to inflate the property's valuation, ignoring the negative implications of the environmental report to secure a higher commission. This is a clear violation of ethical principles and CEA regulations against misrepresentation and dishonest conduct. It prioritizes personal gain over the client's best interests and could lead to legal disputes and disciplinary action. A further incorrect approach is to disclose the existence of the environmental report but provide vague or speculative information about its impact, leaving the client to make assumptions. This lacks the necessary diligence and professional expertise to guide the client effectively. Salespersons are expected to provide clear, factual, and actionable information based on their professional assessment and available data. The professional decision-making process for similar situations should involve 1. proactive identification of potential environmental concerns through due diligence. 2. Seeking expert advice or conducting thorough research to understand the implications of any environmental reports. 3. Quantifying the potential financial impact on property value. 4. Transparent and comprehensive disclosure to the client, presenting all relevant information and potential scenarios. 5. Collaborative decision-making with the client, ensuring they are fully informed to make sound choices.